Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Really, it's quite a massive week this week for the investment markets with the US Federal Reserve meeting this week, and it's widely expected now they will announce the start of their tapering, which is their removal of the support for the financial markets that have been in place really since the global financial crisis back in 2007-2008. The authorities really have provided unprecedented support for financial markets over the last 5 years, and this is the start of the removal and the sort of start of that process now going forward. It really could be quite a massive process. Certainly has spooked the markets when it was first sort of muted back in April or May. But gradually the markets have got used to the idea, and I stated before, the reason why is because the economy now is strong enough to be able to stand on its own 2 feet, and so the support can be gradually removed over the course of time. Following on from that, the Reserve Bank here in New Zealand met last week, and while there was no change to the official cash rate, again the wording coming out of the Reserve Bank now is that rates are looking like they will move up now a little bit sooner rather than first anticipated. Now probably around April is the first sort of increase in rates. That will start to be priced into the market. As stated again before, the mortgage rate has already started to move up a little bit for certain terms. But also as well, it looks like the peak will now be a little bit higher as well. So against that backdrop of potentially rising rates globally around the world, you have seen it sort of backed up with data as well. Certainly the Chinese data coming out recently has been a little bit more encouraging, showing sort of normalisation and stabilisation of growth there, and indeed sort of now looking to sort of bottom out and hover around this sort of 7 to 7.5% going forward. Also the latest data out of the UK as well is looking for the strongest growth now since around 2006-2007. Now you've got to remember that he's coming from a very low base, but again it's just further signs that these economies are starting to recover now, thanks to the very low interest rates that have been in place since the global financial crisis. So that really does have major implications for interest rates and for fixed interest portfolio. You really do want to make sure you are positioned for a potential rate rise going forward over the next sort of 12 to 18 months. There is a further lowball offer out there for some Trustpower bonds. Please, it is imperative that you read the information and certainly seek some advice on that. If you are unsure, call us on 0800 867 323 because certainly the offer that is being made, I know it doesn't include any brokerage, but the offer being made is really pretty derisory. So if you have received any lowball offers out there for bonds or shares, as I say, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.